With that, let's actually quickly get back to more numbers and earnings. Our next corporate conversation is lined up. Dr. Lal PathLabs reported a good set of numbers for the first quarter. Margins came in better than estimates. The non-COVID-19 business has actually moved very, very smartly. Bharath Uppiliappan, CEO at Dr. Lal PathLabs, is with us now. Bharath, thank you so much for taking this call. So I think the market's, taken heart from the fact that now, ex of COVID as well, the business is really growing. And it's a double-digit growth that we're talking about in the revenue. Can you give us a sense of what's happening with realizations? Is most of this growth volume-led, or is it also value-led?
Good morning, and it is good to be on your channel again. And if you look at our top-line numbers, we grew at 7.6% total revenue, and we also grew the non-COVID revenue by 9.7%. Now, when you break this growth in whatever form you want, underlying point is that we have had a good realization improvement led by SwasthFit, which continues to grow well. Our specialty portfolio continues to do really well. Our non-COVID, excluding RT-PCR volumes, has grown by 2.5%. Now, this has been a bit below what you would normally like to have. But as the year progresses, we are looking for a smart recovery in these numbers on the volume growth as well. So yes, largely it was led by realization with multiple factors rolled into it. But as we look forward to the second half of the year, we should see the volume growth also come back in some form and shape.
Okay, so just a point on realizations, since the bulk of this growth is due to realizations, can you give us some more color on that? What is the price elasticity that you're seeing in the market? Do you think further price hikes are even possible? And has competitive intensity now completely petered off?
Yeah, so we had taken some price adjustments on the high-end portfolio of our business, which was more manual, more technical oriented, given the large rising input cost on those counts. And we are happy to kind of confirm that the pricing adjustments we took has really settled in well. There has not been a significant kind of what I would call channel pushback, etc. It has really rolled in smoothly well. So that has contributed to what I would call a bit of margin improvement and a bit of top line as well. But the more heartening thing around the whole realization improvement is on the SwasthFit mix, which is a bundle test portfolio, now going at 112 crores for the quarter. So if you extrapolate a number, we are looking at a 500 crore kind of run rate for this product line, which we built from scratch. The second is that there has also been a positive impact because of the high-end test portfolio, which sells at a higher realization per patient compared to the routine test portfolio. Third thing which worked in our favor for this quarter is that Delhi NCR, which was kind of a low growth market, showed a step up in the growth profile, given that it benefited from an advertising campaign we launched this quarter to take the discussion away from price. From a competitive intensity point of view, yes, if you look at from a past perspective, the money being spent by all players have come down. But the intensity vis-a-vis pre-COVID continues to be high. So that is what we are currently working through the whole scenario. Coming to further price increases,
sorry, go on.
On price increases, our view is that we must take price increases only when necessitated by cost input increases and not to kind of drive revenue growth up. So our efforts are going to be centered around getting the volume growth up back to what we would like for it to be.
Okay, no, got that. No, fair enough. That's a fair bit on realizations, but the no growth in patient volume, I think that is the big concern here. You're saying you will see improvement.
So let me demystify the patient numbers. Last year, Q1 had a very high base versus the historical past. Close to 25% of the patient revenues was in quarter one last year. Now, there could be multiple reasons for it. One is the Omicron wave and the following H3N2 wave kind of coming into the picture, etc. So net of COVID revenues, I think our patient volumes grew at 2.5%. Also, sequentially, we grew volume at about close to 8%, and that is very heartening because if you look at a sequential trend, that is what will really drive this business forward. So that is the reason why we say that, with the coming second half, we will start to see a better number on volume. Currently, the volume number is not flat. I mean, it's flat on an overall basis, but if you kind of peel the onion, then it is a 2.5% growth, albeit not what we would like for it to be. But yes, it is a 2.5% growth on the non-COVID volumes.
So Bharath, what would volume growth, patient volume growth in FY, what would you estimate? And given the better realizations, what would revenue growth overall look like in FY24? Would you be in double digits, early double digits?
Our historical averages have been around double-digit number, and that is really what we are trying to get to. So this quarter's numbers really prove that we can get to a double-digit number at 9.7, 10% growth is what we delivered on the non-COVID portfolio. And as the base of COVID portfolio gets off completely in Q2, I think a 10% growth should really, double-digit growth should be really sustainable.
All right. Hi, good morning, sir. I want to ask you about Suburban. How is that shaping up? And also, there is a concern with regard to the margins out there. So how do you see the margin trajectory improve for Suburban? It's given you good geographical exposure, but on the margin front, there is some kind of overhang from a stock market perspective. Go ahead.
Wonderful, yeah. Suburban was acquired for building a large business in the West, and these businesses are built over a period of time. It takes 5, 7, 10 years to kind of build this up. Now, having got this platform, what we are really working on is putting the growth drivers. Last quarter, we launched a new thematic campaign in the city of Mumbai, which got us extensive visibility and patient feedback saying, yes, Suburban is now visible, what it used to be in the past. So we are investing in growing the business. There has also been a strong D2C campaign launched to acquire customers digitally and play the home collection route during this monsoon and fever season, or vector-borne disease season. So that is something which we're trying to build the business. From a margin perspective, what we're really trying to do is to look at the synergies between Dr. Lal PathLabs and the Suburban ecosystem to be able to derive the maximum benefits possible. If you look at the infrastructure of Dr. Lal PathLab and Suburban together, my estimate is in the region of West, Maharashtra at least, we should be number one from an infrastructure perspective. So the whole effort is now going to be saying, how do we get synergy between these two assets to be driving the growth in the Western market of the country? And that should start to fuel in the margin because we'll obviously harmonize quite a few systems here.
Okay. All right. That was about that acquisition. But sir, what about the cash in your books? You're sitting on some good amount as of now. Could you give us the updated number? I think it's around 800 crores approximately. And are you all on the prowl again? Are you looking at some more inorganic growth?
Yes, if the opportunity comes right, and we are focused on building more business in South and West. So that is where we will really be looking at M&A opportunities, provide a right quality of asset at the parameters at what we set out to achieve really comes through. So yes, we are focused on driving the business forward, getting the top line, the patient volume, the margin mix right, which allows us to invest back in the business. And as an opportunities come, yes, we would be open.
But are you on the prowl? But in 2023, should we hear something?
We are currently focused on getting the Suburban acquisition fully integrated. I think this is going to take some time and effort. But in the meantime, if something comes up, yes, of course, that will be a different discussion altogether.
Sorry, just to round that discussion off with a margin number for the full year, would you be around this sort of 24 to 26 odd % for the full year, Bharath?
So yeah, from a margin perspective, we always said that we would like to get back to the pre-COVID margin level, which is about 26 odd %. And we feel confident at this stage that we should be able to achieve the 26% margin profile. Yeah, the pre-COVID margin profile, that should be definitely achievable.
That should be achievable. And for SwasthFit, which is now about 22% of your revenues, I think you did give us some numbers. On an annualized basis, what are you expecting to do?
We should run about 500 odd crores on SwasthFit. I think that is a good step up what we have built. And when you look back, I think it's been a very good journey on SwasthFit.
So you're expecting an acceleration because I think you did about little over 100 crores. So through the course of the year. We did 112 crores in the last quarter. We did 112 crores in quarter one. So I guess, we're not really driving it. It's the patient adoption which is happening. And we feel happy about that, yeah.
But we will launch more variants of SwasthFit, more targeted, more sharpened portfolio that should provide more value medically for our patients.
Okay, Bharath, finally, speaking of launches, I think the guidance says that you will be adding, 15 to 20 more labs in the coming year. What is the overall plan for the year, both for Suburban and for the mother brand? And also just give us the sense of, cash funding and, how you're looking on the financial side as you roll these centers out.
Right. So the way we have kind of said is that we will grow in clusters to really support the hub and spoke model. So all our effort is adding new infrastructure, be it collection center, pickup points, or even our own processing labs in a cluster-based approach. Having said that, we are currently focused on building large amount of infrastructure in tier 3, tier 4 cities because that is really an underserved area. So all the labs we launched in Q4 of last year or Q1 of this year, or what we will do in Q2 of this coming year, will all be in tier 3, tier 4 cities of the country, spread across northeast and parts of, as we look forward to the second half, we will open some more labs in west and south as well. So we are really looking at building a cluster-based approach in tier 3, tier 4 cities across the length and breadth of the country. From a cash perspective, like we discussed, we are sitting about 700 odd crores of cash. And as and when we get a good opportunity to deploy the cash, yes, we'll definitely come back and update.
All right, look forward to speaking with you again soon. Thanks very much, Bharath, for joining us and running us through all of that detail. Thanks very much. Well, that's Dr. Lal PathLabs with some outlook.